All right, team. Well, good evening, everybody. Good to see you. We are starting off the stream in a little bit of a different location here. We are right behind Billionaires Row, 56th Street, and wait for it. This is actually 6th and a half Avenue. So 6th and a half Ave. I'm not sure if you guys have ever been here on the streams before, but it is a beautiful night out here in New York City. Now, finally, after days upon days upon days of horrible, horrible weather, every day here has been cloudy, rainy, nasty. But the good news, my friends, today was probably about a 9.4 out of 10 in terms of weather in New York City. It was fantastic. It was a beautiful day. Today was about a high of 68 degrees. Not too hot, not too cold, bright sunshine. You could walk around with a nice t-shirt and you wouldn't be sweating, you wouldn't be freezing. It was a fantastic day today, fantastic weather. Hold on one second. Rosario TR7. This is Santos FC, good to see you. So one of the things that we're gonna be talking about today, everybody, we got a big day coming up on Wall Street, really to end the week off with a bang. Now, I think you guys know what this is. Maybe some of you don't. But we are going to be getting the payroll numbers out. Yes, the jobs numbers will be coming out tomorrow. It's important to watch for a couple of reasons, but I think the most important reason that we're going to talk about tonight on the live stream is that this is going to have a pretty big influence on monetary policy. So should that should that jobs number come in hotter than expected, so many economists are expecting about 250,000 jobs. Assuming it comes in higher than that, well, the Federal Reserve is not going to like that at all. The Federal Reserve actually wants to see those numbers declining, but more importantly than that, they actually want to be able to see the unemployment rate going up. And as of right now, the unemployment rate is about 3.7%. From last reporting, the last jobs number, we actually did see an uptick in the unemployment rate. But if we remember correctly, the reason for that uptick in the unemployment rate is because we did see a little bit of, I wouldn't really say normalization in that labor force participation rate, but we saw a good amount of people, about 600,000 individuals, rejoin the look for labor. So we'll talk about that. We'll give our predictions and we'll do our monthly Walks in Wall Street poll in the chat to see where everybody thinks the non-farm payroll numbers are going to come in, as well as the unemployment rate. We're also going to be touching on the Bank of England tonight. We're going to be doing a little bit of a breakdown about just what exactly happened and why the Bank of England had to jump in here and intervene in the gilts market. And we'll wrap it up with some other interesting topics. But for now, let's see who we have in the chat. I see Julia M is here, says hey. Pazza2 says hello. Sweet Country Living in Michigan says good evening, Tom. I see Paul Greenwell, Animal DL. Chris Beeman is here. Says howdy, Tom. Good to see you, Chris. Austin City Limits and Vinny Castellano. Good to see you, Vinny Castellano. Please send my regards to Maria as well. Jay says good evening, Tom. Glad to see you out and about tonight. Thank you, Jay. You know, I'm not sure about you guys, but does anybody notice it's extremely, extremely busy out tonight? It's usually not this busy here in New York. It seems like everybody decided to come to work today. Now, I think I've said this before. Usually the city is the busiest on Tuesdays and Thursdays, but today was busy. MIDTOWN was absolutely rocking. And usually at 8:30 at night, MIDTOWN, this part, especially after the pandemic, has been pretty dead. So it's actually nice to see a lot of people out and about. I see Abdullah is here. Good to see you, Abdullah. Neil Bell says hello from Durham, UK. Pleased to be here. Good to see everybody in Durham. Trust you're well. We are right now standing on the corner of West 57th Street and Broadway. Now, if you look up Broadway, this big building here is going to be the Trump International Hotel and Tower. So on one side is actually, private condominiums, residences, but on the other side is, I believe it's a 5-star hotel as well. Very nice building here at Columbus Circle. Sally is here. Good to see you. Adriana says, hey, Tom. Erin says, Tom, happy Friday, everybody. Well, not yet Friday. Maybe for you in your neck of the woods, but it is Thursday. It's a very, very busy Thursday here in New York City as we overlook the beautiful Central Park Tower here. Anchovy is here. Says, hey, Tom. Good to see you, Anchovy. Dre Parks says, best wishes. The Fed is not going to pivot anytime soon, and I am buying more puts. Yeah, I mean, I think it's interesting. I'm not sure if you joined the stream yesterday, but I had read an interesting article out of Seeking Alpha. Now, Seeking Alpha tends to have more opinionated articles of different analysts on Wall Street, which I enjoy reading. Now, I think I'm going to have to agree with you, Dre Parks, that I don't think the Federal Reserve is going to pivot. However, I was reading an interesting article, and I guess I'll just give a quick summary of that article again. I think it'd be useful to this conversation. But there's many analysts on Wall Street that agree with us, right? They think that the Fed is not going to pivot anytime soon. And we actually had more Fed presidents come out today saying that there's absolutely no way that they're going to change course on monetary policy. It doesn't matter if the US dollar continues its strength and crushes emerging market currencies. The Federal Reserve will be steadfast with raising rates. But there's some analysts that believe the Federal Reserve will be forced to pivot and start quantitative easing. Sort of the similar situation that happened over in the UK when the Bank of England essentially had to come in there and be the liquidity provider by buying gilts. Now, one of the reasons why they had to do that is because the new Prime Minister, Liz Truss, she thought it would be a good idea to implement sort of, Reaganomics type policy that would stimulate the economy, spur economic growth during a time when, the UK is experiencing 9% inflation. I'm not sure right now is the exact time to do that. So the bond market freaked out, and there was an implosion in the debt market. Now, if we understand how the debt market works or the bond market works, when there's an uncontrolled sell-off in the debt market, you have rates spiral out of control and rip to the upside. So knowing that the bond market is an extremely, extremely leveraged place, a lot of these bond fund managers, especially maybe associated with pensions, were very, very highly levered. So if your bonds are taking a beating and you have an uncontrolled sell-off in the debt market, well, you're probably underwater on your purchases and you're getting margin called. So you're going to have to raise capital to post as collateral. So that just led to a cascading effect and a continuous sell-off in the debt market, where BlackRock actually had to come out and say, guys, if we don't have somebody backstop this, aka also known as the Bank of England, the debt market is going to absolutely implode, going to have an uncontrolled. Even though the Bank of England was talking a pretty good game and saying, look, we're right at not going to raise interest rates. I actually used to live here, by the way. I'll give you guys a quick story. So this building right here, this actually used to be a Subway sandwich. Right in here, used to be a Subway sandwich, and I lived right above here. Not in an apartment, in a closet. I lived inside of my brother's friend's apartment in a walk-in closet back in the day. Anyway, more on that later. But you had this sort of cascade effect in the bond market. So in order to stabilize yields, to pivot, not because they wanted to, but because of the crisis. So the Bank of England did get in there and start buying gilts. Now, I don't think the same thing is going to happen. The US dollar is very, very strong, but we'll see. All right, what about now? I think we may be good now. Maria says that's horrible. I like Miami better. All right, team, what about now? I think we have a little bit of a dead zone here. Usually Columbus Circle is pretty bad with the buffering. Hey, Martin K says, Tom, looks like a landfill on the sidewalk. Yeah, I mean, there's been a big problem. Dre Parks is all good. Yeah, I remembered why. So I was going to be like, you know what? I haven't been near Columbus Circle down over, 8th Avenue in a while. And now I kind of remember because it tends to buffer a lot here. Dre Parks says it's all good now. Copy that, guys. Thank you. Paulette says, happy Thursday, Tom. Thank you for streaming Manhattan. No problem. Yeah, I thought I'd show you guys a little bit of a different neighborhood. So this is actually where I went to college over here not too long ago. Sonia C. Yeah, Mike C says it's nice to walk somewhere different. Yeah, I mean, I used to walk this street every single day back in my college days. Maybe I'll take you guys over there. But I think the internet may be a little bit shaky. Sonia C says, Tom, what are you doing for Thanksgiving? Oh, wait, it's different in the United States. For the holidays, I'll probably just be in New York, hanging out with the family. Nothing too crazy. All right, everybody, so this is 9th Avenue and 58th Street. And man, has this area changed since I've last been over here. Sunshine After Rain is here. Good to see you. Sonia C says, I'm in Canada. Thanksgiving is this weekend. Oh, that's right. Canadian Thanksgiving is coming up. Completely forgot. Well, happy Thanksgiving to you guys. That's awesome. Hope you're having a good one. Teresa Diaz, good to see you guys. Welcome, welcome. Yeah, you know what? It's Thursday. It's almost Friday. It's Friday Eve. We'll take a little stroll over to John Jay. It's not going to hurt anybody, right? No big deal. But yeah, so anyway, back to what I was saying. I think I agree with you guys. I think we're on the same page here that we don't think the Fed is going to pivot. But could there be a similar situation where the bond market implodes? Sort of like what happened over in the UK. And, I want to make a quick joke. It's funny that, the vast majority of the players in the bond market are institutional, grade investors, right? Very seldom, are retail investors, dealing in the debt market. So we have the most sophisticated people dealing in the bond market, but this thing always blows up. So I guess that's something to be said. Hey, RS is John Jay College. Good to see you. I think I'm doing some, maybe I'm doing like impromptu marketing for John Jay. Probably shouldn't be doing that. Linda Voss Silva is here. Good to see you. Joan K is here. Welcome, Joan. Thank you for being here. Trust you're well. Fidel Cashflow is here. Love the name, very unique. So as we know, tomorrow is going to be a very, very busy day, big day on Wall Street. We are going to get the job numbers, okay? Now, I believe the consensus on Wall Street is for about 250,000 jobs. So 250,000 jobs. However, the unemployment rate is supposedly going to be not changed. So as of right now, the unemployment rate stands at about 3.7%, I believe. And that was actually up slightly, mainly because we saw the labor force participation rate tick up by about 600,000 people. And I remember we actually had a really good conversation because we were speculating why the labor force participation rate, or why people are starting to enter back into the workforce. And we said, you know, I think a lot of people retired maybe prematurely during the pandemic when equity valuations were very high. You know, S&P 500, the Dow Jones Industrial Average, and the NASDAQ were trading near all-time record highs. So people during COVID, they were like, you know what? I think I have enough money saved. I'm gonna retire and I'm gonna opt out of the workforce. Maybe you were scared of getting COVID or whatever. But now that major equity indices are substantially lower, been getting rocked, maybe people are starting to enter back in the workforce because they have to, not because they want to. So this is where I went to college. Beautiful John Jay College. Now I will tell you, back in the day, this was not a Paris baguette. It was actually like a little bodega called Strokos back in the day. It was called Strokos right here. I remember the first time I walked through these doors at John Jay College, there was all scaffolding over the entire building. They were doing a full restructuring. So my first day of classes, they put up the scaffolding and they didn't take them down until I graduated. So I had to, it was the funniest thing. The entire college was encapsulated with scaffolding for the entirety of my college career. Go figure. But yeah, this is it, team. I don't think I've ever taken you guys this far over. You know, now that I was up near 57th Street, we might as well take a little bit of a walk. Pretty good Greek restaurant here on 10th Avenue and 58th Street. Hey, Marcy is here. Good to see you. Says, hey guys, welcome, welcome. Robert is here. Says, hey, Tom and friends. Jonathan Richards is joining us. What's up, Jonathan? Dre Parks has got to love Jerome Powell. So I forget which Fed president who said this today, but did anybody see the very, very, I would say, unique verbiage that came out of one of the Fed presidents today when he was asked about the strong dollar? Now, the question went something like this, and I'm paraphrasing here, but the question was, when the Federal Reserve raises the Fed funds rate, that puts upward pressure on the US dollar, which in turn crushes emerging market currencies. And are you aware of that? They were asking one of the Fed presidents. And are you doing anything to course correct? And you know what the answer was? The answer was that the Federal Reserve does not have any business in dealing with other countries' issues. So in other words, they don't care. Their job is to kill inflation in the United States, not to sort of care about other countries. To which case I said, so real quick here, I used to have the majority of my classes in this building, and this building was so old and decrepit, I'm not even sure if it's part of the college anymore. But yeah, I actually used to have all my classes in this building. But I think the Federal Reserve kind of needs to care. And the reason for that is because the US dollar is the world's reserve currency. Many commodities are priced in US dollars. A lot of emerging market countries have a ton of dollar-denominated debt. So as that dollar-denominated debt increased over the last 2 years, it's going to be harder and harder to service that debt. So I think the Fed should care. So that was a very surprising comment to me. So I think they're going to be pretty steadfast. Marcy says, how is everybody? I'm doing pretty good. Marcy, we are on the, technically this is the Upper West Side, you're correct. So Marcy, we are just doing a little walk down memory lane here where I went to college. This is 58th Street. and 9th and 10th Avenue. This is the CUNY John Jay College. We're just gonna be doing a quick walk around. I'll quickly show you guys what the library looked like right in here. Very old college. Hey, Jared is here. Says, hey Tom, watching here from Miami, Florida. As a 25-year-old just entering the working world and learning about the market, I really appreciate these streams. Thank you for sharing the knowledge. Well, Jared, thank you for being here, my friend. And I'm definitely jealous that you're in Miami. The past 2 days in New York have been just abysmal weather. Raining, cold, freezing. But today wasn't too bad. Jared, the weather, the temperature was about 68 degrees, bright sunshine. Not too bad. Not too bad today. Well, thank you for watching. Hey, Shadow Stock says, I'm a CUNY guy, Baruch, Accounting Plus, Invest Finance. Hey, that's awesome, man. So Baruch was actually my first choice, but I didn't get in. And since you're a CUNY guy yourself, you probably know you pick the top 5 colleges that you want to attend. I didn't get into Baruch. I was crushed. Well, not really. I guess I'll say I wasn't crushed due to my ego. Just kidding. But yeah, John Jay was the only one that I got into. And for me, I was always a good student in high school. Like, I thought the coursework was rather easy. However, I'm just not a good test taker. So on the standardized tests, like my SAT, the ACT, I did rather poorly on that. But yeah, so this is the new building. So I believe in 2011, John Jay College of Criminal Justice built this massive building. And one of the cool things about this building, we are now overlooking the computer lab. But I believe the top 5 floors of this building is actually dedicated to the New York City, the police department, crime labs. So they have all of the forensic science laboratories right here at John Jay College of Criminal Justice. And many of my friends that I went to John Jay with are now in the NYPD. A lot of them are in the CIA and FBI. But my major, I did criminal justice with a minor in economics. And I did take some forensic accounting classes, things like that. But then I wound up working in tech sales, which is a little bit weird. But I guess you never know where life is going to take you. But you know, John Jay, I think CUNY is a good system. I have nothing bad to say about the college. I may have disagreed with some of my professors, but at the end of the day, I mean, for $2,000, can't beat an education. You know, get a degree for $2,000 a semester. Yeah, Shadow Stock says it's good you didn't become a New York City police officer. Yeah, so that was originally my plan, right? I wanted to be in the NYPD. But I was looking at the compensation structure. I was always interested in the financial markets and money. I was obsessed with that. And the pension system, and I'm sure anybody that's joining the live stream, a lot of our New Yorkers are familiar with New York City pensions, right? And everybody always reminiscences on those times of the tier 1 and tier 2 New York City pensions, where you could have a sanitation worker or an FDNY or police officer, you know, retiring with a $250,000 pension. Well, it's not like that. It's not like that anymore. Trust me. The pensions are really, really egregious. And over time, you know, due to the budgets of the city and, you know, pensions are essentially bankrupting a lot of countries even. That's sort of what we saw happen when the Bank of England had to intervene. It was mainly due to a lot of these pension funds being over leveraged, but we'll talk about that later. But essentially in the NYPD now, if you're going to enter the academy, you're funding the vast majority of your pension. So when I looked at that, I'm like, this is pretty much just like a glorified 401k plan. And yeah, let's just put it at that. And then I sort of, you know, backed out and course corrected to where I wanted to go. But at the end of the day, I still have a lot of my good friends that I went to college with in the NYPD, so much respect to them. Just the pay is not, I don't know if I could do it, living in New York on an NYPD salary. Tyree says, hey Tom, what are your thoughts on I-bonds? I don't really have too many thoughts on them. I think you're limited to about $10,000 a year. Now they are probably pretty attractive. What are they yielding, about 10%? Now, I think if you have multiple LLCs or something like that, or business organizations, you could probably purchase more. But I personally don't own any, to be honest. So these are the front doors of the new building. Obviously, you guys could tell from the other side, this is a much more modern facility. And again, I believe this is 11 stories, and I think the top 5 is dedicated to the forensic science labs, which I believe the NYPD actually uses them here too. Hey, Andy is here, says hello from South Korea. Welcome, welcome. Yes, Shadow Stock says yes, you will do much better saving on your own. Yeah, and so I think Shadow Stock, you're right. You know, I grew up, you know, my family is from Long Island, right? My brother was the first in my family to actually go to a 4-year university. So if you're familiar with, you know, Long Island blue collar workers, everybody always says you got to work in civil service and get the pension, right? But as I started doing more diligence on that, I'm like, it's really not what it used to be in terms of the pension system, especially the new recruits that are going into the NYPD now. It's not those really, really lucrative pensions like those tier 1 and tier 2s from when, you know, my parents were doing it. So, but yeah, I sort of fell backwards into tech sales, and so far I really like it. It's very lucrative. So West 58th Street. Now, when I was in college, none of these buildings, you see all these brand new, beautiful apartment buildings, all of these were just starting construction. None of these were here. 10th Avenue looked, or now this is 11th Avenue, looked extremely different. So this is actually kind of nice here. This used to be a complete construction wasteland back in the day when I went to college here. And look at all these brand new apartments. These are actually really, really nice. So we'll walk down here. I'll show you guys where I did the soccer practices. Hey, Dre Parks is not a blue collar guy, but I heard the union is where it's at. Is that true? Well, it depends. So I have a couple buddies who are like Local 14, which is the Union of Operating Engineers. And those construction jobs are high in demand, and they're very lucrative as well. You know, as you gain seniority, right? If you're going to go into a union, let's say if you're in the, you know, Local 14 Operating Engineers, you're probably running like a crane or something like that, heavy equipment operator. As you grow in seniority, it's a very good job, and it's a very stable job. The electrical engineers here in New York as well, iron workers. But I never really wanted to do that. I just had an interest in the NYPD. But then, you know, during the time, I think I was slated to be in the 2018 NYPD Academy. And if I did go in during that time, I mean, I don't have to tell you guys, just think about everything that was going on from 2018 to 2020 in New York. So definitely don't think I could deal with that. Gary Carpenter says hello, everybody. Welcome. Good to see you. Shadow Stock says, I know of one that left the NYPD after 2 years. Yeah, you know, what's interesting is that, so I think this is a good topic. You know, I think this is a good topic to talk about, because maybe there's people that are, you know, interested to see how civil service works here in New York. Here's sort of the career trajectory of a police officer, at least now, right? At least now. So a lot of my friends that are in the NYPD, they're either trying to get transfers to other departments, more specifically Nassau, Suffolk County, because those are like the very, very lucrative positions, right? New York City police officers, they do 10x the work, and they get, you know, a quarter of the pay than, you know, a Nassau County or Suffolk County police officer. So there's a huge bum rush of NYPD that are trying to jump from the NYPD to a more lucrative police department like Suffolk County, Nassau County, Westchester, Orange County. Now, I think that's an argument in and of itself, right? Because if anybody's familiar with Long Island, New York, we have some of the highest taxes anywhere. And that's really because teachers unions and civil service people get paid a ridiculous amount. You know, some Nassau County police officers were earning over $350,000 to $500,000 with overtime, and there was big crackdowns on that. Hey, Dusty Cole, what's up, man? Good to see you. So 11th Avenue is home to a lot of the car dealerships.
Should I bring my portable charger?
But if we go a little bit further down, you guys are going to see a park right here to your right. This is called Dewitt Clinton Park. And back in my college soccer days, this is where we used to practice. If this field was filled, we would actually take the bus to Randall's Island. Now, I'm not sure if many of you are familiar with that. It's an island in between Manhattan and the Bronx, where there's many sports fields, sports stadiums. But 11th Avenue is home to a lot of all the auto dealers, car dealers. Hey, War Walkers, is Tomcat, you would make a nice police officer. I'm sure you would be a detective now. I appreciate that, War Walker. Thank you so much. You know, I'm actually really glad I came down here to 11th Avenue because this is completely different. When I tell you guys, you know, 5 to 7 years ago, all of these buildings were just beginning construction. I think they did a great job. And they actually cleaned up the streets because when I was going to college here, there was a lot of, you know, like drug use over here, things like that. It's actually a really nice neighborhood now. All right, let's talk about, you know, one of the things that's a little bit concerning to me. Look at that action in the 10-year U.S. Treasury yield today. So I think as of today's close, that 10-year U.S. Treasury yield went up again to about 3.823%. The dollar caught a little bit of a bid as well at 112, and we were down pretty much across the board versus, as we talk about the S&P 500, I think it was down about 38 points. The Dow was down about 346 points, and the NASDAQ composite was down about 75 points. So these movements in the debt market are very concerning to me because we're seeing an increasing event where liquidity is really drying up here. And I think I retweeted something on Twitter. We always talk about the Federal Reserve increasing interest rates, but very seldom do people talk about the Fed balance sheet. So the Fed balance sheet is comprised of mortgage-backed securities and U.S. Treasuries. And I think the Federal Reserve unloaded more U.S. Treasuries last week than they did. Oh wait, are these? I think this may be. No, it's not my college. I don't think so. Hey, Herbert Daughtry, thank you so much for the $2 donation. I appreciate it. Just paging Officer Tom. Thank you so much, my friend. I appreciate it, Herbert. Thank you for your support. So this is the field where we practiced. Looks a lot nicer than it did when I was playing here, but anyway, yeah, so watch that Fed balance sheet. You know, they're starting to sell or unload U.S. Treasuries. So when we talk about liquidity, the Federal Reserve has really been one of those entities that has been putting a bid in this market. So when we talk about artificially suppressed rates over the last decade, one of the ways the Federal Reserve does that is just by buying U.S. Treasuries, buying mortgage-backed securities, suppressing yields and providing liquidity to the market. But now they're actually net sellers of Treasuries. So we are now officially out of quantitative easing, full bore into quantitative tightening. And sort of like what I was saying at the beginning of the stream, you know, many people think the Fed is going to continuously be steadfast with QT. The only way that I see the Fed pivoting is if they're forced to pivot, is if we have sort of like a UK situation. And again, that started because of Liz Truss decided it would be a good idea to spark a huge stimulus plan, a stimulus package, when the UK is facing about 9% inflation. in which case that triggered a massive sell-off in gilts. Yields spiked uncontrollably, so the Bank of England had to get in there and start essentially going back to quantitative easing again, with buying gilts to have yields settle down a little bit and save their currency. Hey, Tariq Khan, thank you so much for the $20 donation. You are very kind. This is Tom, buy oil and gas stocks now going into the winter. Thank you, Tom, for all you do and sharing the knowledge on the stream. Well, thank you, Tariq. I appreciate that very much. Thank you for your comment and thank you for your donation. Much appreciated. Hope you're having a good Thursday so far. You know, I want to check out these guys. I want to see if they're any good. You know, some of these guys that play pickup are actually pretty good, man. So for any soccer fans here, if you ever come to New York, I'll give you guys the best place for pickup. It's Pier 40. And not only does a lot of good players play there. I remember when I was in college, there was a lot of players from Columbia University, St. Francis, St. John's. So you would have a lot of D1, D2, and D3 college players just hanging out playing pickup on the weekends. And so if you guys are in high school or something, a lot of recruits actually, recruiters hang out there as well. Little tip, but go to Pier 40. Pier 40 is a blast. A lot of good soccer fields around there. Yeah, Sam Potts is playing late. I would play all the way to midnight sometimes at Pier 40 when they would close it. Dusty Cole says, Tom, wanting to get out and play some footsie and soccer. I kind of do, but I think I'd probably get slaughtered now. I'm an old geezer in that world now. Dre Parks says, might want to buy some corporate bonds. Interesting. So we are across the street from the Mercedes-Benz building. Let's check out the FDNY coming down 11th. We call these the bus. And you also have a very nice view of the Hudson Yards here too. So if you head straight down, you know what? We never walk down 11th Avenue. I think we're gonna spend the entire stream here. We'll go all the way to the Hudson Yards, but I just gotta cross. Yeah, Gary Carpenter's like me and you both. Yeah, in sports world, especially if you haven't played in a while, you know, 27 years old is pushing on a senior citizens. I think those guys would clean up shop. Anyway, so let's talk about corporate bonds for a moment. So we've talked about, you know, ever since the great financial crisis, right? Or I would say leading up to it, you know, low central bank rates was one of the reasons corporations or corporate debt went from about 6% to 2% yields, right? That was between about 2007 to 2001. So corporate debt during that time grew from about 40% of the US economy to about half. So think about it like this, as yields started to shoot up, it started to trigger unprecedented losses. So I think one of the most relevant cases we could talk about now, is anybody familiar with the leverage buyout deal of Citrix? Well, let me cross the street here. Here, I'll point out another thing. If you keep walking down here, this is where all of the horses, you know, that walk around Central Park, they park the horse stables, or the horses sleep right here, right behind DeWitt Clinton Park. So if you guys have ever seen the Central Park horses, like the tourists go on them, the carriage rides, things like that, it's that's where they go for the night, right here by DeWitt Clinton Park. You can smell it too. Austin City Limits is be careful crossing. Thank you, Austin. Yeah, I mean, we saw an accident just last night on the stream. A food delivery bicycle unfortunately got hit by a car. So you definitely got to take it easy. So anyway, as I was saying, I I think major banks, including Goldman Sachs, I think Credit Suisse also, I think their total loss was about 500 million on debt that was backing the leverage buyout of Citrix Systems. And we've sort of talked about this before, that artificially suppressed yields, I bet this is the first gas station you guys have ever seen on my stream. So all the gas stations are here on 11th. Hey, what's up, man?
Open house kitchen, yo.
Oh, thank you, man. Appreciate it. Yeah, all the gas stations are either on 11th, or if you go all the way to the upper east side of Manhattan. So we've been talking about this on a stream, that we've been having this environment over the last decade of artificially suppressed yields, artificially suppressed interest rates. And if nobody's earning any yield in savings accounts or anything like that, the market essentially forces you to go and search for yield out into the marketplace. And I think that's why we've been seeing environments of crazy, irrational exuberance, I would say, right? You know, leading up to all of this crazy meme stock action. You know, even if you want to look at some of the valuations of these SaaS companies like software as a service, it seems as if, since we've been in QE infinity, artificially suppressed rates, money managers, also private equity is definitely a culprit of this, is just pushing and advising these companies to only focus on top line revenue growth. So if you're not growing at least 100% quarter over quarter in your top line, nobody wanted anything to do with you. But once interest rates start to go up, what were the first stocks that started to get hammered? And I wrote about this in the newsletter. I'm like, look, it's all funny and great when rates are artificially suppressed. You have all of these money-losing SaaS stocks taking off, going to the moon. You have PE expansion. These companies are trading at a ridiculous level, the price to sales, price to earnings. But once that liquidity, or once that QE stops and rates start to go up, it seems like Wall Street doesn't want anything to do with these companies anymore. They've been pounded into the ground. You look at some of the notable names we talk about a lot, like Twilio, Zscaler, Okta, CrowdStrike, Snowflake. All of these companies that were super high focused on top line revenue growth, yeah, they'll perform well in an environment of suppressed rates. But once rates start to normalize, it's like everybody run into the exit gates. So here's another, you know, there used to be an enterprise here. Here it is. This was one of my first jobs back in the day. I think I told you guys. One of my first jobs was a car washer at an enterprise rent-a-car on the Upper West Side. And we actually used to work right across the street from Seinfeld. Seinfeld had his garage there where he kept all his amazing cars on 83rd Street between Amsterdam and Columbus. So I'd always see him riding his bike. Tux Brown, good to see you. Gary Carpenter, welcome. Danny Long says it's the American way. M. Sign says, Tom, what is your view on the Kramer inverse ETF? I saw some ETF fund applied for the inverse Kramer ETF. I would never get involved in it. I'd probably, it's funny, I guess, but you know, I don't think it really serves any purpose. R2D2, welcome. Good to see you. War Walkers as well. I've never seen a gas station in downtown. Yeah, not many people know that there are gas stations in Manhattan, but there are. I think we're actually about to pass another one here. Dan Zhang says, wow, it's rare to see a gas station in the city. But wow, take a look at the price. So did anybody see, supposedly in LA, gas prices at the pump are now over $8 a gallon. Now, that's probably not widespread. Now, maybe it is. I'm not in California, but usually what people do in times like this when gas prices are going back up, they find the most expensive gas station, take a picture of it, and post it on Twitter. But I was looking at one of the tweets, and this guy was like, yeah, it's $8.12 a gallon here in California. I mean, that's insanity. I don't know how people do it. Teresa Diaz says, Tom, it is $6.39 in LA sub. Wendy says it's over $9 a gallon here. Wendy, where are you from again? Vancouver, right? Dre Parks says, Tom, do you have any opinion on options trading strategies? I'm doing covered puts right now. So I'm not a big options guy. I'm very upfront with that. The only time I use options is, let's say if I have a big position in a name. So I did this during the last bull market. I owned a lot of Atlassian, right? And Atlassian was blowing out their earnings, beating on both the top and the bottom line, and it was getting very, very extended over its 50-day moving average. So I don't really want to unload or dislodge my very, very core cheap shares. So what I'll do going into earnings, just in case they miss, or if the stock retraces back to its 50-day, I'll buy some insurance. So I'll pick up some puts to hedge my position. But in terms of pure speculation, I'm not an options guy. I tend to be more of a pure can-slim positions trader. I really don't use options. Now, I will recommend somebody. I'm not sure if you're familiar with the Market Wizards books, but I think Dan Zhang helped us out with this too. I believe it is the first Market Wizards book by Jack Schwager. He interviewed a gentleman by the name of Anthony Saliba. And Anthony Saliba is probably one of the most notable or successful options traders there's been. And I think right now, he's since come out of retirement, and I believe he opened like a derivatives exchange servicing the cryptocurrency markets, I think, in Chicago. Anthony Saliba. If anybody wants to learn more about that, just Google Anthony Saliba crypto exchange. And I think he has his own crypto derivatives exchange. But yeah, that's who I would check out. I would read the Market Wizards book, and I would watch a couple interviews with Anthony Saliba. UWU says, Tom, are you as optimistic as Ken Fisher? I would say so. All right, guys, this is actually a pretty cool view. We're never over here. So if you look all the way in the distance, this is One Vanderbilt, and right next to it is the H&M building. So this is Times Square, essentially, you're looking at. Jay says OPEC is cutting production, so the price of gas is going to skyrocket again. Yeah, I think OPEC announced that they're gonna, what was the exact amount, Jay, of the production cut? Now, I know that Joe Biden is now digging in once again to our strategic reserves. Maybe that's a little bit of a political thing to do before the midterms, but at some point they're going to need to fill that back up again. But if we look at crude oil futures, if you look at like Brent crude futures, or you look at light sweet crude, ticker symbol CL, notice where we're trading at. I think we're trading at like $88. Yeah, ticker symbol CL. But we're bumping up right against that 50-day moving average. And we always talk about that. Seems as if markets, it was very, very extended to the downside, rallied back to its 50. So we'll see if it holds, or we'll see if it rolls right back over. We'll see. Okay, Rusty Golfer says it was a 2 million a day cut. Tariq says 2 million. Carlos Ramos says 2 million barrels a day. Copy that. Dong says, greetings, Tom, from Brazil. Good to see everybody in Brazil. Robert says, Tom, do you think we should legalize weed federally? I think so. I think so. Now, my opinion has changed on that over the years. And I used to be a very, very, really sort of like stuck up, clean cut person in relation to having an opinion on you know, marijuana and things like that. But I read and I started to is anybody familiar with this particular professor? I think he still teaches at Columbia University. His name is Professor Carl Hart. Check out this dog. It's one of the Shiba Inu. I think he still teaches there. I'm not sure. I could be mistaken. But Professor Dr. Carl Hart is really is the sort of the person who changed my perspective on the war on drugs in the United States and things like that. Brilliant guy. I won't really go off on a big tirade and a tangent about it. It's a little bit off topic, but I would listen to a lot of his interviews online and read his books. He has about 2 books out, and he teaches some courses at Columbia too. Really brilliant guy. Yeah, R2D2 says that electric bike was flying. Well, I'm not sure if you were watching the stream last night, R2D2. But unfortunately, we saw one of the food delivery bike guys get hit by a car. And I think it's really important everybody slows down, both the vehicles as well as the bikers too. Andrew Trimmins says criminalization of marijuana is awful. Concentration should be mental health and financial health. Yeah, I tend to agree with that. Oh man, look at this. Check that shot out, everybody. That's a 10 out of 10. This is a cool shot. You could see the Empire State Building through the buildings here. It's lit up in all red. That's awesome. All right, we got to do a rating in the chat. What do you guys rate this view of the Empire here? I think it's a 10 out of 10 just for the uniqueness of the shot. Yidrim says, greetings from Istanbul, Tom. Love the good publications. Greetings, everybody from Istanbul. Thank you for joining us here in New York. Appreciate it. So we're walking down 11th Avenue now. This is West 42nd Street. So if we actually walk all the way down here, we'll hit right into the Port Authority bus terminal. So we're definitely not going to do that. We're going to continue on our way down to 34th Street. And that's going to run us right into the brand new Hudson Yards. Dre A is tuning in from Belize. My uncle and I always watch your streams. Be safe. Hey, thank you for saying that. I appreciate that. Thank you, everybody from Belize. NMB 045, good to see you. Welcome. So if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you guys along for the ride. So coming up here in a minute, you're going to see the Jacob Javits Center. So the Jacob Javits Center is a very, very cool place. I wish I could actually take you guys inside. But every year they have really cool like car shows in here. I think Comic-Con is also in here. And they've remodeled it over the years. And you guys are going to get a pretty good view of it as we walk down 11th. But check this out. I actually saved the best for last. As I pan the camera over to the left, you guys really got to hold on to your face because this is a face ripping view. It's going to blow your face off. Check this out. You have a beautiful view of the Empire State Building. And right to your right, you actually see One Penn Plaza. And right in front of One Penn Plaza is the New Yorker Hotel, very famous hotel, the New Yorker. Now, I would like to say one thing, since we visited my alma mater, John Jay College. So over the years, there was a particular company that specializes in like third-party dormitories. And they actually bought a couple of the floors in the New Yorker Hotel. Now, if anybody's familiar with the City University in New York, we don't have dorms here. It's not like a regular college. We just you know, everybody lives in New York. Well, pretty much everybody. So we just go to class and we go home. It's not like an actual campus life. But if you're coming here from out of town and you want to go to a CUNY, you actually stay in the New Yorker hotel. It's sort of like an off-campus housing. And if you're an international student, or maybe you don't live in New York, you can actually have dorms now if you go to a CUNY. Pretty cool. And this is the Hudson Yards development. I think we got to cross. Give me a minute. Hey, Fabricio's here from Brazil. Good to see you, Fabricio. This is West 40th Street. This is actually people going on the Lincoln Tunnel. We'll wait till the... Yeah, thanks, man. So this is everybody going on the Lincoln Tunnel. You can see. Man, look at that. You could see, thank you. You could see all of the buildings in Times Square. The Empire State Building. And in a minute here, you'll see the Jacob Javits Center. Yeah, somebody says the construction on the Hudson Yards is insane. They had to build an elevator or an elevated foundation for the development. Yeah, and I think that's because this is where the West Side Yard is. So if anybody's familiar with like the Long Island Railroad, once the LIRR drops you off at Penn Station, the trains actually go all the way out here to the yard to get serviced. The mechanics are there, they get cleaned. So I think they had to elevate Hudson Yards literally over the train tracks. Dre A's is here in Belize. We're watching out for weather that may pass. Wish us luck. Yeah, this has been a crazy year for the hurricanes. Now, the strange thing is, I think this is one of the years where we've had the least amount of hurricanes, but we had one of the worst hurricanes that ever hit the United States, Hurricane Ian. Hey, the RT 440 says, hey Tom, I try to stay away from 8th through 11th Avenue and 34th, 59th, unless I'm looking for trouble. What do you think? Generally, I would agree. Now, 8th Avenue is a total disaster, which I would agree. However, 11th has actually gotten pretty good. Now, here's what I would avoid. I would avoid anywhere between 34th Street and 42nd Street on 8th Avenue. Because you're gonna get all of the, you know, the addicts that hang around Penn Station. There's a lot of heroin, unfortunately. And then at 42nd Street and 8th, you have probably one of the worst buildings in all the entire United States, which is Port Authority Bus Terminal. So I would definitely avoid that. But this is the Jacob Javits Center. And I think this just recently went under a multi-million-dollar remodel. They did a pretty good job. It looks nice. Everything seems to be really clean and nice here, so I give credit where credit is due. Javits Center's looking good. 11th Avenue wasn't too bad. It was pretty clean, nice new buildings, a lot of police. Oh, taxi cab, was he really? Gary says, Tom, this week I bought 1-year T-bills paying 4%. I'm 71. In the early 80s, they were paying over 14%. Oh my gosh, that's insane. Well, Gary, thank you so much for joining. I appreciate it. Yeah, I mean, I guess that's maybe on the positive side. Because treasuries, you know, the Federal Reserve essentially said they want the yield curve to be positive in real terms. So factoring in after inflation, they want yields on across the entire yield curve to be positive. And I think we're getting there. I think we'll get there. Dre Parks is my prediction is the jobs report is down. Danny Long says driving a car is dangerous. All right, so let's do that. Let's do that now. So everybody knows Friday is a big day on Wall Street. We get the jobs numbers. And every night before a big jobs report, non-farm payrolls, we do the tradition on the Walks on Wall Street stream where everybody does a prediction. So I'll give you guys the consensus, okay? Just so you have something to base your predictions off of. So consensus is that we're going to come in at about 250,000 jobs, and the unemployment rate should stay unchanged at roughly 3.7%. So I'll turn it to the chat. Put in the chat, what do you guys think? Are we gonna come in over 250, under 250? Is the unemployment rate gonna drop? Is the unemployment rate gonna go up? What are your thoughts? So everybody in the chat, what do you think we're gonna get? 250,000 jobs, 300,000? What are your thoughts? Danny Long, good to see you. So Jay Peaks says, Tom, I think we're gonna get over 250K. Greats is under 250. Susanna, thank you for joining. Andrew says over 250. Wow, Whisker says 300K. Dre Parks is under 50, 250, and I can tell you why. Dre Park, please tell us why. I'll tell you guys my opinion here in a second. Marcy says, thinks you're gonna see closer to 300. R2D2 says, Tom, unemployment is going to go way up as well. Iceman says slightly under 250. Roberts is over 250, and the unemployment rate is going to go up. Okay. Interesting. Rachel Abreu is over 250. So consensus, I think it's safe to say consensus on the stream is that the labor market is still going to run white hot. Wow, check this out. Beautiful view of the Empire State Building and the New Yorker Hotel. Fantastic. So Whisker says, Tom, in the Midwest, we're seeing an explosion of hiring and manufacturing. You know, that's super surprising to me because on the live stream on Monday, so the first business day of every single month, we hear from the Institute for Supply Management as they release their Purchasing Managers Index. And one of the things we saw in the manufacturing sector is some of the respondents were actually saying that they want to start to let go of people. So it's interesting that you say that. Very interesting. Jay says a lot of layoffs lately. Oh, so I think Comic-Con is going on right now? No way, it's crazy. I've never been, but wow, look at that. Sabrina Fair is here. Photos from around New York. Obvious artists. Students gone back to school. That may weigh on the report. Possibly. Possibly. Whisker says it's interesting. Tool and mold machinery, large-scale construction machinery. Huh. Well, thank you for sharing that. Very interesting. Roberts says, Tom, the labor force participation rate will also go up. Yeah, so I think that's actually the more important thing to look at. So many people are so fixated on the unemployment rate, but in my view, a better indicator is that labor force participation rate. Now, I think last report, we saw an influx of about 600,000 people entering the workforce. And this could be from a multitude of reasons, and we were sort of speculating this. But during COVID, here's why I think the biggest reason why we're starting to see people enter back into the labor force. I think a lot of people were caught off guard and they retired too early when they weren't ready. You know, they saw their portfolios trading near all-time record highs after we had all of this crazy COVID stimulus. The NASDAQ, the Dow Jones Industrial Average, the S&P 500 trading at all-time record highs. Oh, I thought someone was coming around the corner, man. Jesus. I thought that cop was probing at somebody, and I thought somebody was coming around the corner to get the cop, man. Holy crap. Sabrina Fair says, yep. Yeah, so I think that's probably what's going to happen. So I think a lot of people retired too early, and once they saw their net worths essentially getting cut by 35%, a lot of people are like, look, I got to go back to work. Either if it's part-time, if it's a full-time gig, maybe I'm just working security, something like that. I think a lot of people thought that this bull market was going to last forever. But what goes up must come down. Jacob O'Brien, what's up, man? Good to see you. Yeah, Roberts is 2 cops just busting each other's chops. Yeah, I was looking at the guy and I was like, you know what? He's probably poking at some homeless guy that's on the floor, something like that. And you never know. I've seen some crazy things where police officers will go to check on like a homeless guy, and he wakes up and he goes crazy and he starts attacking these people. I thought that's what was happening. Dr. Longus says, true, Tom, labor participation is so important, and it has been going down for some time overall. Yeah, it has. And that has prompted many people to say that this recovery that we've had since the great financial crisis was sort of a phony recovery, right? And we sort of talk about this because, in my view, and I tend to have, I would even say, more of a radicalized view on this, mainly because I can't think of a better descriptive word. But essentially what we've had since the quote-unquote recovery of the great financial crisis is a very lopsided recovery, right? So a lot of the people who have made a great income, owned a lot of equities or owned property, you saw your net worth like 10x over the last 12 years, right? And there's a direct correlation between the expansion of the Fed balance sheet and equity indices, the price or the trajectory of the stock market. So as the Federal Reserve has been buying bonds, they're going on a bond buying binge, purchasing US Treasuries, purchasing mortgage-backed securities, artificially suppressing rates. This has led investors and institutions from all over the world to heavily speculate in the equity market, right? Driving up valuations, also speculating in real estate, driving up valuations of these assets. Now, the problem is, who owns all the assets in the United States? The vast majority of the assets are owned by the top 10 to 1% of Americans, right? So the person who's working paycheck to paycheck, they're in debt, they don't own any of the assets. They didn't recover from the great financial crisis. And the reason why I say that is because real wages have been flat to down over the last 12 years. So if you were to make the argument that, yeah, there may have been a recovery for the middle class, well, then wages should be going up for the middle class. And that's not the case. The only thing that's really inflated, if you want to talk about inflation, is asset price inflation, right? So it's created this lopsided recovery. I like to call it the two-tier society. So anybody who has had a very high allocation equities, anybody who has owned real estate since, let's say, 2011 to now, has done really well. And I think that central banking, not just the Federal Reserve, this is central banks from all over the world, I think they make boom and bust cycles more aggressive. Right, you see these meteoric rises in equity prices, just like we saw in 2020. And if anybody has read Loeb's book, has anybody ever read Gerald Loeb's book, How I Made $2 Million in the Stock Market? Loeb sort of describes irrational exuberance to a T. And as I've reread that book, you sort of saw history play out in real time, right? You saw all these people during COVID that couldn't gamble on sports betting. They couldn't gamble at the racetrack. they started to gamble in the stock market, right? You saw all of these funny videos of Dave Portnoy, you know, sort of making a mockery out of the stock market. And I think, look, it's all in good fun, but I think at the end of the day, you have to realize there's people who follow people aimlessly into investments. And I think there's a lot of people that got crushed holding a lot of these meme stocks and all this nonsense that didn't have any conception reality. And that's sort of what you see when money is very easy. When money is sloshing around in the economy, you get your Trump bucks, you get your Biden bucks, you have these blow-offs. And sometimes, if anybody is familiar with like Elliott wave theory, right? I'm not a big Elliott wave guy, but in Elliott wave theory, you know, when a wave 5 cycle, sometimes they call them like a grand super cycle, when it ends, you see periods of crazy irrational exuberance. You know, people buying second and third homes, people speculating in the stock market, using a ridiculous amount of leverage. And that's exactly what we saw. But once the Fed turns off that spigot, everything reverses and you see very, very rapid declines in stocks, especially the very high beta growth stocks. So check this out. This is actually the Equinox Hotel. I think this is another 5-star hotel right here at Hudson Yards. And I think some of these hotel rooms could go for $1,000 a night or more. Crazy. Dr. Longest says, I remember hearing about poor labor participation 10 and 15 years ago. Blues Rider is here. What's up, Blues Rider? Welcome. Trust you well. We are right here at the Vessel. Daniel says, hey, Tom, could I ask what the minimum wage is in New York City? Because here in the Philippines, it's approximately 1,000 pesos or equal to $20 US a month. The minimum wage in New York City is $15, I think, right? Could anybody confirm that for me? I believe it's $15, I think. Hey, Julia M, good to see you. Says, Tom, OPEC is cutting by 2 million barrels a day. I did hear that. We're seeing gas prices start to go up again. Danny Long says, love the eucalyptus towels. Who here is a member of Equinox? Photos says, I just Googled it, it confirmed it. It is 15? Yeah, I remember all the fight for 15 stuff. I think if you're any in the 5 boroughs, I think you're at $15 an hour. Maybe Long Island is different, Nassau, Suffolk, but I think it's 15 in New York. Jacob C, good to see you, my friend. Thank you so much. Bagels and Walks, good to see you. So we were in the Hudson Yards now, but check this out. This is the Vessel. This is the Vessel at Hudson Yards. Roberts is Planet Fitness, $10 a month. That's what I do. Oh, Danny says you were. Copy that. Cindy Foley is joining us tonight. Good to see you, Cindy Foley. Charles D says the stock market is down. David says when a neighbor loses their job, it is a recession. When you lose your job, it is a depression. It's a pretty good saying. The Ellery one says, oh my God, Tom, that was funny. I already watched it 3 times. Yeah, when I got scared by the police officer back there. I mean, look, it's funny, but at the end of the day, everybody's on edge here in New York. It's crazy. Hey, Mona D is here. Welcome. Alex Jr. is here. Cindy Foley says, cool building. So, yeah, Marcy says Equinox is too expensive, but it seems sort of worth it. You know, a lot of people, so here's what one of my friends did. During a lot of the COVID discounts, you were able to get a 1-bedroom apartment in New York City for a reasonably affordable price. Now, I know that's crazy, but it was true. You know, during COVID, when everybody moved out, you could actually get a pretty decent place here for an affordable price. And a lot of my friends moved into buildings with gyms already in them and sometimes swimming pools. And you were able to cancel your Equinox subscription. So pro tip, if you're gonna move to New York and you don't wanna spend big bucks on an Equinox subscription, just make sure your building has a gym in it. Jay Peaks says, Tom, do you think New York is still unsafe? You know, I'm sort of torn between that. I think New York is generally safe. I think New York City is a generally safe city, but you got to watch your back here. Especially at night when you're taking the train by yourself. You just got to be smart. You got to have street smarts, because unfortunately, we do have a very big homeless problem here. And unfortunately, it's not only that these people are homeless, but they suffer from very, very severe mental health issues, unfortunately, and they cannot get the help that they need in the city. So these individuals are responsible for these random acts of violence, pushing people on the subways, random slashings. So I would just say, look, it's a safe city. I think the New York City Police Department is, without a doubt, the best police department in the world. I think there's a lot of good people in the NYPD that work to keep us safe, but they're fighting an uphill battle because of a derelict government here in New York. So, in conclusion, yes, it is safe, but just watch. You just gotta watch yourself. That's all. Julia M says, Tom, do I think if gas goes up at the pump, it will start inflation all over again? Well, I think inflation is still very persistent. And did anybody watch what Neil Kashkari said today? So Neil Kashkari is the Minnesota Fed president. And one of his concerns is something we've been talking about for a long time on the streams, and that is inflation is very entrenched into the core CPI. Now, the Federal Reserve doesn't really look at the headline number, okay? Because if you look at headline CPI, that includes very volatile food and energy, and the Federal Reserve does not care about that. What the Fed cares about is core CPI that is exclusive, or it excludes very volatile food and energy, okay? Now, the biggest issue that we've been seeing as it relates to inflation is shelter costs. And shelter costs make up about 33% of CPI. So you could think about, your rent, or let's say if you own a home, okay? One of the ways the Federal Reserve calculates, the High Line is closed. I wanted to take you guys on the High Line. That's a bummer. We'll do it tomorrow. But yeah, this is the entrance to the High Line right here at Hudson Yards. But it must be 10 o'clock at night already. Holy crap, we've been streaming for an hour and a half. That's all right. So one of the things the Fed wants to look for is the core inflation to come down, right? And the number one component that the Fed likes to look at is shelter costs, and the prices of homes and the prices of rent has been going crazy. However, there usually is a lag in monetary policy, which means as the Federal Reserve raises interest rates, you can probably bet with high certainty that the rest of the bond market, or the yield curve, is going to go up. So that 10-year US Treasury yield is going to go up, and it has been going up. I think as of today's close, we are trading at 3.67% on that US 10-year Treasury. And the 30-year fixed rate mortgage rate moves in tandem and almost mirrors the 10-year US Treasury. So I think as of today's close, according to bankrate.com, the average yield on a 30-year fixed rate mortgage is almost 7%. It's about 6.87%. So that's going to take time for the effects of interest rate hikes to trickle down to reducing shelter costs. And I think it's starting. You're already seeing, same newly home sales, or new home sales, and existing home sales crater and fall off a cliff. And the next step to that, now that sales are down, is that prices will go down. And I think prices will go down. But it may take until Q1 or Q2 of next year to start to see rent prices coming down and real estate prices coming down. But the first thing that happens during that cycle is that the buying activity dries up. And when the buying activity dries up, if you're a seller of real estate, what are you going to say? You're like, wow, my house isn't selling. I wonder why it's not selling. Well, it's probably priced too high, right? If interest rates are 7% and your 3-bedroom, 2-bathroom home is priced at $500,000, well, maybe that buyer could have afforded to buy your house at $500,000 when rates were 3%, but now rates are 7%. So it's not going to happen, right? Still, prices are going to have to come down. You're going to see price cuts, and the housing market is the business cycle essentially. So I think you're going to see, inflation improve, but I think it's going to take some time to show up in core CPI. The headline number is coming down because commodity prices have been getting whacked. Energy prices have been coming down. But I think as of last time we checked, if you look at crude oil futures, we've actually rallied back to $88 a barrel. And we are just hitting the 50-day moving average that is declining. So the question is, do we break above the 50-day and hold support, or does the 50-day act as resistance and do we go lower? Nobody knows. I think we have a clue, right? I think Julia M and a lot of other people on this stream have noted that OPEC is now going to reduce by about 2 million barrels a day. So that's probably going to put upward pressure on prices. Hey, Today Tomorrow is here. Austin City Limits. Welcome. Jay Peak says, why does economists keep saying there is a housing shortage for the past 10 years? Do you agree with that? I think I agree that there's been a lot of underbuilding, right? And you could thank government bureaucracy for that. And pointless zoning laws and things like that. Now, I have read some articles that sort of outlined the thesis for the housing shortage myth, that there's a lot of vacant homes out there that people use for like short-term rental. So I've read all that. But we have substantially underbuilded since the great financial crisis because we went through the great financial crisis. And I think that scared a lot of people from taking risk. Hey, DWG is here. Good to see you, my friend. Welcome. Deja Vu says I-bond investments could cover current interest. Well, I think you're limited to about $10,000 a year in I-bonds, right? But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami. And we start at about 8:30 p.m. Eastern time after I get out of work. And we'd love for you guys to join the stream, so feel free to click that subscribe button. Also, if you're interested in the conversation that we talk about the financial markets, if you scan the QR code on your screen, I write a free financial newsletter where we cover the US equity markets, we cover emerging markets, housing, talk about fixed income. Scan the QR code, punch in your email, you'll receive it for free. It's a good way to stay connected on the streams. Hey, we have the ABX girl is joining. Good to see you. So ABX girl, since you're joining, I gotta ask you, what is your prediction for tomorrow? What do you think the jobs number is gonna come in at? We already had our monthly Walks in Wall Street prediction, but I'm very curious as to what you think. Now, consensus is that many economists on the street think non-farm payrolls are going to come in at 250,000, and the unemployment rate is going to be unchanged at 3.7%. But what do you think? Very curious. Hey, Manny Explores, what's up, dude? Happy Thursday. Good to see you, Manny. Yo, Manny, I was telling these guys, I took them over near John Jay College, my old alma mater. And dude, that area has changed completely since I've last been. I've never been to 11th Avenue and probably literally since I was in college. It's pretty nice over there. Brand new apartment buildings, brand new sidewalks. I think they did a good job on 11th Ave. I was pleasantly surprised, to say the least. Hey, Line Sync is here. Derek is here. Deja Vu. Yeah, Manny explores there's so much change in the condos. Yeah, and all of those condominiums, apartments, whatever you want to call them, they probably command pretty high rents too. I'm sure they all look like those luxury apartments, probably have really nice views of the Hudson River. Jay Peaks says, do you have a podcast? I guess you can call this a podcast, I guess. But no, not like a traditional podcast. Lori East is the only inflation-proof job is if you're a politician public servants can vote for. Yeah, I guess that's a little bit ironic. Jay Peaks says, really enjoy your streams, Tom. You are able to recap the market and break it down so we can have a better understanding. I appreciate you. Thank you for being here. Thank you for your kind comment. Christian Wilson says, Act Right is down 20% in New York. What is that, Christian Wilson? I'm not too sure. Sabrina Fair says, red and white, what is the Empire State Building colors for? I'm actually not sure. Does anybody know why the Empire State Building is red? Dre Park says, you should start a Zoom call with your subs one day. You know, I'm thinking about some interesting things that we could do on the channel. I may want to be more active on Twitter Spaces. So I think we may do a Walks on Wall Street Twitter Spaces one time. So if you guys want to stay up to date with that, if you have Twitter, you know, follow Walks Wall Street on Twitter. And maybe we'll do a Twitter Spaces, and Twitter Spaces, essentially everybody could come up and we could actually talk to one another. You know, one of the reasons why I started the live stream is I've always wanted to make like financial videos, but I find it really boring that just to make like a 10-minute video explaining the financial markets and then I can't really talk to anybody. I guess I could respond to the comments, but I sort of want to do it live, right? Because when we're doing it live, that reminded me of the Bill. Did anybody see the Bill O'Reilly? He's like, we'll do it live. Hilarious. No, but I mean, when we do it live, let's say if I have an opinion on something, or I'm presenting a bull thesis on, I don't know, cybersecurity stocks or something, you know, somebody else may come in and say, hey, I think your thesis is invalid because of X, Y, Z. And you get that real-time feedback. And also we have people from every single industry joining, right? I mean, people who work in finance, civil service, lawyers, doctors, real estate developers. So I think we have a very diverse group here, which is good. Yeah, so Jay Peaks says, do you think paying high taxes is one of the main reasons Citadel is moving to Florida? I think it's probably a big reason. Now, also the quality of life issue, I think, was cited as well. And I will say this, because I've worked in Manhattan all of my working life. When I started to work down in Miami, I will say with 100% certainty, it is, the quality of life is better. But let me sort of explain that position, because whenever I say that, everybody says, oh, you're one of those people that you hate New York. No, I love New York City. New York City is my favorite city in the world. I think it's the best city in the world. But I worked in tech sales for 7 years, commuting every day to Manhattan, you know, taking the train in, to and from Long Island every day, in the snow, the wind, the rain, the heat. And it's kind of nice to sort of have a different, more slower paced environment in Miami, and where not everybody is so uptight and so fringe. It's just a different type of environment. It's not, New York is a very, very competitive place. I could say that with certainty. If you move here, and especially if you work in, let's say, investment banking and hedge fund business, tech sales, software sales, it is a very, very competitive place to be. And when you're running at 100% all the time, you get a little bit fatigued. You know, everybody does. I consider myself a hard worker, but you know, to a point you need a little bit of a break. So quality of life, I think, is a little bit better there, right? Because you have more space. You know, I have a house, an investment property, so I have land, I have property. I wake up and there's not, it's just I think you guys understand what I'm saying. It's not to say New York is bad. It's just to say it's good to have a little bit of a break where I could work somewhere where it's more peace and quiet, let's say that. So this is I think this is still operable as well. This is a beautiful Moynihan train station. However, this was an original post office. And if I had a choice, and let me know what you guys think in the comments, if I had a choice between the original like Greco-Roman architecture and some of these new modern buildings, I think I would take this all day, every day. I think this is just so much more unique than the, you know, thousands of mega tall glass skyscrapers. I think this is just, you can't duplicate this. This is just fantastic. I don't know, maybe that's a hot take. Hey, DJ Blackjacks, hey, Walks from Wall Street. I used to work at the first Equinox location, which was a couple blocks away from the enterprise you worked at. No way, dude, that's insane. We probably ran into each other many times. Was that really the first Equinox location there was? That's insane. DJ Blackjack, thank you for your comment, dude. That's awesome. Yeah, Manny Explorer says, love the old school architecture. So somebody says they speak Spanish in Miami. Yeah, so all of my neighbors, I'll give you a little bit of context on my community where I moved. I live in so the majority of the population where I live is Cuban immigrants and Haitian immigrants, people from Haiti. So on my block, everybody speaks Spanish. Some people speak French. So is there a language barrier? Yeah, there is, but I sort of take that as a positive, right? Because I think if I want to do international business, you got to learn Spanish. I think my biggest regret in life is not being fluent in Spanish. Everybody speaks Spanish, right? Especially when I started to come into the city a lot. And now I'm working in Miami. There's a lot of startups that I work with from Latin America. You gotta be able to be fluent in Spanish. So I don't take that as a negative, because let's say if I walk into the bodega, are they gonna understand what I mean when I speak English? No, they're not, but that's gonna force me to learn. And the only way I'm gonna actually learn to be fluent in Spanish is if I force myself to speak it. So I don't know, I reframe that to more of a positive than a negative, to be honest. Optimus 17 says, Cuban here, but never lived in Miami, only New Jersey and New York. Yeah, so I'm not sure if this stands anymore, Optimus 17, but I think at one point in time, maybe it still is, but I think the largest concentration of Cuban immigrants is in Miami. I think that's still the case. It may not be, but it is still, I think it may be still the case. Yeah, Manny Explorer says, I speak Spanish and realized how helpful it is, even in New Jersey and New York. There are neighborhoods that they don't speak English. Yeah, and so that's another thing, right? So just take what Manny Explorer says in the chat and take that to an employer, right? So let's say if you are, especially if you're in sales, right? Let's say if you're in sales and you're selling into a location where the vast majority of people speak Spanish, and I can only speak English, well, I'm disadvantaged. If somebody else has it on their resume that says they are bilingual, well, they're more valuable. They're a more valuable asset to that company. So it's a good point. I'll get there. It's gonna take some time, but I'll get there. Billy Joel, fantastic. One of the greatest musical talents in the world right here. Billy Joel says Madison Square Garden is the center of the universe as far as I'm concerned. I would agree. All right, real quick in the chat since we're pushing an hour and a half. Favorite Billy Joel song? Go ahead, in the chat for all the Billy Joel fans. Favorite Billy Joel song right now? Mine's Italian Restaurant. Hey, Kevin Ramsey, good to see you. So Spark Carnival with the Piano Man, that's pretty good. It's in the top 5. Josie says Uptown Girl, Optimus 17, The Stranger, Piano Man. A lot of Piano Man, I wasn't expecting that. Abby says Uptown Girl, okay. Ooh. Dayan says Vienna. I think I may have to change mine. I think mine is Vienna. Vienna is probably the most underrated Billy Joel song of all time. Fantastic song. War Walker, Vienna. There we go. Okay, I'm switching mine. Am I allowed to do that? I'm allowed to do that. Mine's Vienna. So I think this is where the players come in at Madison Square Garden. Oh, Roy, you're right. Roy says For the Longest Time is a very underrated and amazing song. Roy, you're correct. Austin City Limits is moving out. So I think Vienna is the best song because at the end of the day, it has a lot of meaning to it, and it's a good song as well because I sort of find myself like trying to go 100 miles an hour, especially at work. But you could slow down, dude. You don't need to do everything at one time. Slow down, you're doing fine. Photos from around New York says Tom, I looked up Italian Restaurant, the song Billy Joel used to meet with his producer, an Italian restaurant on Billionaire's Row. Wow, I didn't know that. Photos, is that true? So Billy Joel used to meet with his producer, an Italian restaurant on Billionaire's Row. Huh. I didn't know that. Yeah, Jones says Vienna is a nice song. Agreed. All right, so now we are coming up on 7th Avenue. This is where the New Jersey Transit entrance is right here. Since we're right here, we might as well head to Koreatown, might as well. So now that we're on the jobs report, one last thing I wanted to say about it is it's not so much the number that's important, it is the reaction that the Fed has to the number. And sort of let me explain my position on that. In essence, the Federal Reserve is going to look and see if the labor market is still running white hot. Because if the labor market is still running white hot and the unemployment rate stays steady, or even if it goes down, that's going to signal to the Federal Reserve they need to continue to tighten. So I wouldn't be surprised if we saw a hotter than expected jobs report, that this market could be down substantially tomorrow. Because essentially what that would signal to the market is that, yes, it's good that, we added more payrolls in the market, but the problem is that means the Fed is going to continue to stay tight for longer than expected and increase interest rates. Now, I'll be looking to see if the labor force participation rate goes up or down. I think that's going to be most important as well. But this is Pen 2. So this is right outside of the Madison Square Garden. This is going to be a complete new development here. Joseph says we didn't start the fire. Also a great one. Fantastic.
No, they just want to go home.
That's a great one. This is the Q32 bus. Victor G says, need more unemployment. Go SPY. Yeah, I mean, well, Fed Chair Jerome Powell said that he wants to see the unemployment rate go higher. Now, I think you could have a very interesting scenario here where the unemployment rate may artificially go higher, and I'm using air quotes. And the reason why I say that is this. It's sort of what we talked about earlier on in the stream when we were near the Jacob Javits Center. I think since inflation is very, very persistent, and since the equity indices are still getting pounded, there's a lot of people that retired too early that have now seen their retirement portfolios decline 35%. They've also seen, let's say if they live on a fixed income, they've seen their purchasing power be eroded because we're battling, 8.5% inflation. So a lot of those people are going to be forced to enter back into the labor market, and that influx of people into the labor market could push up the unemployment rate. And again, that's why I more so along the lines focus on the labor force participation rate as opposed to the unemployment rate in and of itself. So I don't know. I think tomorrow's going to be a very volatile day. Just as if we didn't need any more volatility. Hey, Elias, what's up? This is good evening. Good to see you, Elias. Jerry says domino effect expressed. Jack says, I just Googled, we'll do it live. Funny. I know. That was back in the crazy Bill O'Reilly days. DWG says Amazon hiring freeze. Yeah, we talked about that last night, but here's the crazy thing, DWG. We talked about the Amazon hiring freeze. It was a big article in the Wall Street Journal. But then today, oh, check out the Empire State Building here. Check this out. Right in front of the TD Bank sign. Well, Amazon said they're going to hire, I think, 150,000 people for the seasonal work. Hey, just the guy. This is AMD lowered guidance. Yeah, you're right. I wanted to talk about that as well, too. Thank you for bringing that up. So that's a very important trend we need to watch. So does anybody remember back, I want everybody to think back to Q2 earnings season when we covered extensively Q2 earnings. Now, one of the things I said at the beginning of earnings season is that the most important thing to look for this earnings season is not necessarily the actual earnings report, but the forward guidance. And in addition to the guidance, our company is going to be able to maintain their gross margins. And if companies are able to maintain their gross margins, that means the inflationary pressures that we're seeing, companies are able to pass those inflationary costs on to consumers. Now, I have some good news. So just the guy, thank you for bringing this up. I think AMD actually cut their gross margin guidance from 55% down to 50%. So I think this could be a start of a trend here where we start to see businesses, we start to see companies issue profit warnings, issue revenue warnings, and issue gross margin warnings. And usually once you have margin compression, that usually means one of two things. Obviously, business is slowing down. But number two, if your COGS, or cost of goods sold, is going up, and the American consumer or consumers around the world have reached their tipping point, in which case you've come to an impasse where you are no longer able to raise prices to offset your raw materials, well, now you have margin compression, and that's not good. And one of the things I also said was I believe that this recent stock market sell-off that started at the beginning of 2022 was mainly caused by higher interest rates. I do not think a lot of the action in the stock market right now is pricing in earnings declines or earnings revisions, earnings contractions, things like that. What I do think it's priced in is higher rates. So once Wall Street starts to price in declining earnings, I think that's when you're going to see your big flush waterfall to the downside. Now, again, that's speculation. I don't know if that's going to happen or not. But something tells me that you're going to start to see over the next coming weeks, headline on CNBC, headline on the Wall Street Journal, headline on Barron's, Bloomberg, saying Goldman Sachs reduces their earnings target of S&P 500 companies by 5%. And it's just going to continue to be chipped away and whittled away. And that means the market is going to have to reprice. So right now, I believe the S&P trades for roughly 16.5 times forward earnings for next year. Now, if earnings revisions go down, or if earnings estimates go down or revised down, well, that means the S&P is no longer trading at 16 times forward earnings anymore. It may be trading at 20 times forward earnings, something like that. You get the picture. So we could still have some sizable declines here in the market left. And AMD's profit warning and revenue warning, and also cutting their gross margin, is not good. I think the stock is down about 4% after hours, if I'm not mistaken. Maybe a little bit more. I think it recovered some of its losses, but we'll have to see. Oops, sorry about that.
Was hitting.
Hey, Jackson Church. So should you buy or rent in New York? I guess it just depends on what you're looking to do. I mean, are you looking to be a landlord? Are you trying to buy an investment property to make cash flow off of it? Or I guess it really depends on your personal financial situation, right? If you don't have any money for a down payment, and if you're not making any money, then I would say rent. But if you are very rich with cash and you want to maybe buy a building in the city and rent it out, then I would say, yeah, I would go for it. However, I would say this. Now that interest rates are going up, I think you're going to see real estate values start to roll over here. So maybe if you're a little bit patient, I would definitely wait maybe Q1 or Q2. And I think you're going to get some deep bargains here. All right, so we are now approaching one of my favorite Korean barbecue restaurants in New York City. Now, Koreatown is one of my all-time favorite places in the city. But for those of you non-New Yorkers, I would recommend coming here. This is Baekjeong. It's fantastic. Hey, the Ellery is here. It says, hello, Tom. Good to see you. Ellery, what do you think about the Empire tonight? Dan Zanks, Tom, I have just moved to Forest Hills from Long Island City. Kind of sad when I don't have the city to use anymore, but I'm saving $1,000 a month. Oh my God. And the unit is much bigger too. Holy crap, dude. Well, that's awesome. So Dan, how do you like Forest Hills? What do you think? Thumbs up, thumbs down? So here's another thing I wanted to say about real estate. And we sort of touched on this last night. Is that you're starting to see a lot of these single family home builders now start to tell their investors or signal to the market that demand has significantly dried up for housing. So let's say if you're a single family home builder, interest rates have gone to 7%. Let's say the average 30-year fixed rate mortgage is going for 7%. Well, your demand, your buyers have all dried up. So now you have a glut of inventory. So how are you going to offload that inventory? How are you going to get rid of it? Well, this could potentially be very lucrative for Wall Street or big private equity, because one of the things that these single family home builders could do is say, look, we overbuilt. We have, let's say, 300 single family homes. They're all very organized and located in a specific cul-de-sac, which is going to be very easy to manage. They'll just call up BlackRock. They'll just call up a single family rental firm and say, look, we'll do a big block order and we'll give you a 15% discount on the entire thing. Now, the issue there, and why a lot of people may be a little bit upset, is because people may say, well, this is exactly what we wanted. We wanted to see demand dry up, so supply comes onto the marketplace, and it will reduce pricing. That's what we wanted to see. But many of these publicly traded single-family home builders, they may say, look, we don't want to take it on the chin that bad. So we may call up our institutional friends and say, look, I'll sell you 40, 50, maybe 100 homes in a big block order to Wall Street. Maybe it's financed with debt, or maybe it's a cash offer, who knows. And they'd rather take a 15% haircut than a 50% loss on it. And then these big private equity, or I should just say more generalized Wall Street firms, could just use them as rentals and make money off the cash flows. So I think that's something we need to be watching for too. Yeah, Charles D says if you can invest an extra $1,000 a month, you're winning big. 100%. 100%. All right, we are at Take 31. This is my favorite Korean restaurant in the city, but it's right next to Her Name is Han. And Her Name is Han is actually owned by the same owner as Take 31. I'll give you guys a view on the other side. Jay Peaks says, Tom, hedge funds are buying up subdivisions and charging huge rent here in Orlando. Yeah. Yep. Zach Druce is probably freshly minted digital notes. Hey, Western Mass Davis here. Says, Tom, walks from Wall Street. How's it going tonight? The Empire State Building is gorgeous. Thank you so much, Dave. Appreciate you, my friend. Hopefully you're having a good Thursday. Tom G says, how do you see the future unfolding? I tend to be very optimistic on the future, but as it relates to the financial markets, I'm a little bit nervous. Kevin Ramsey says somebody is paying cash money for these residential properties. Yeah, I mean, Kevin Ramsey, I think you're right. Now, one of the arguments some people are making right now is, why would these big investment firms want to buy single family real estate? It's so cumbersome and tedious and monotonous, whatever you want to call it, to manage. Well, not necessarily, because let's say if, to somebody else's point, as they referenced Orlando, Florida, let's say if you're a single family home builder and you purchased a huge plot of land and you're going to sell that entire cul-de-sac or the entire community in a big block order. It's not like these homes are dispersed hundreds of miles apart. They're all in one specific community. I think you're going to start to see entire communities across the United States be managed by huge property management companies, and they're going to be all single family homes, and people are going to rent them. So I don't think it's really going to be that hard to manage. You know what would be interesting? So out of everybody in the chat right now, does anybody here actually rent a single family home? Anybody in the chat? I'm curious. Let's see if anybody in the chat actually rents a single family home. And if so, what is your experience? Do you like it? Hey, Trap News is here. Good to see you. Charles D, welcome.
I don't believe you.
Oh, the Ellery says me. What is your experience? You like it? Dr. Longus says, man, if Tom is nervous about the markets, you know it's bad. Well, actually, I usually tend to be very, very negative on the markets. right near a bottom. Wow, so the Ellery says, I'm with a management company that nickels and dimes the fumes. Jeez. Tom G says, yes, an ancestral home, $250 a month. It's a good deal. Oh, but you're moving briskly? Zach Drew says, my brother does. DJ Reviews in Under 2 says, I rent an apartment here in Southeast Georgia. Good to see you, DJ Reviews in Under 2. YouTuber says, yes, Tom, I rent $1,950 a month, 3-bedroom, 1.5 bath in Southern Virginia. Wow. That's great, dude. That's a pretty good price. So I'll tell you guys, I'll disclose. So I rented out my property for an entire month. So right now, somebody is renting my place, my 3-bedroom, 2-bathroom home in Miami, for $3,550. Can you believe that? So I've changed up my Airbnb strategy. Now, here's what I'm gonna do, because it's a little less, it's a lot easier to manage. This is the One Vanderbilt building, by the way. Beautiful building. So I'm only doing a month-long rental or longer on Airbnb. And what I've noticed, it attracts a different type of tenant. It attracts people with families. Maybe they're going on a months-long vacation. In this case, they're coming here because the mother, she's a stay-at-home mom, and the father could actually work remotely, and they have 2 little kids. So instead of spending a ridiculous amount at a hotel and not having like a front yard and a backyard and things like that, they can rent out an entire house that's 15 minutes away from one of the best beaches in Southern Florida. They could park their car there. They can use my place to cook meals. Each one of their kids has their own bedroom. So it's sort of like, I think it's worth it. I mean, $3,550, 3-bedroom, 2-bathroom home. It's a beautiful home. Maybe a little biased there, being that it's mine. But I think that's a pretty good deal. I think that's a pretty good deal. And my mortgage is like, with everything, the taxes, insurance, probably like $1,600. So it's ridiculous. And I'm so surprised of how crazy the demand was. The demand was crazy, 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 crazy demand. Robert says, Tom, but where are you gonna live? Here in New York. Dr. Longus is excellent strategy. Yeah, because I was thinking about it. Let's say if you have a person staying for the weekend. Yeah, that's fine, but then you have to clean it, you have to get it ready for the next person. So maybe even if you have 2 to 3 months of vacancy, or let's say even if you have 6 months of vacancy, when you rent out the place for an entire year, those are really, really high quality tenants. So they're probably not going to destroy the place. The guy has a good job, he has kids. You know, maybe the kids will write crayon on the wall or something, but who cares? Lionel Thomas, good to see you. Dan Zangs has got to tell you this crazy story. I've just heard, I know a girl who lives in Long Island City who Ubers to Stony Brook and back 3 times a week. It costs her $200. What? Why on earth would she do that? Dan, that's crazy. Yeah, Kevin Ramsey says great on the gross margin for sure. Marcy says beautiful home, I'm sure. So my house is a very, very basic piece of property, but I will tell you this. The demand for the snowbirds is crazy. But then again, as I'm running the numbers on it, I mean, let's say if I was, wanted to just get away from New York for 2 months, instead of buying, like a timeshare and having to deal with all that nightmare, I'd much rather just rent a ready to move in home for 2 months and then just call it a day and then have no liability and no nothing. So longer term rentals are very good. Very, very good. Ooh, line sync. This is Tom, hate to mention it, but how's your battery? Battery's pretty banged up. Battery's not doing too well. Let me check. 15% maybe? Let me see. Ooh, worse. 11%. All right, in which case this is East 36th Street. We're gonna make a left. But I think we covered a lot on this stream. I'll take you guys with me to Penn Station. Wow, check this out. That's a 9.8. That's a 9.8, maybe 9.9. So I think we covered a lot. So we talked about the crisis that was averted by the Bank of England. We sort of talked about what happened, right? So what happened was the Prime Minister, the new Prime Minister, decided it would be a good idea to have a massive spending plan, cut taxes when inflation is raging over in the UK, about 9% inflation. So what happened is investors were like, oh my gosh, I don't want anything to do with the pound. I don't want anything to do with gilts. So they started dumping massive amounts of bonds. So yields on these gilts spiked uncontrollably. Now, a lot of these pension funds had huge gross exposure to derivatives tied to gilts. So as they had to post collateral for their margin calls, it forced a perpetual selling, which somebody had to come in, wink wink, Bank of England. Oh, check this place out. Bank of England had to come in there and start buying gilts to suppress yields and stabilize the debt market. So that's quantitative easing. So the reason why we talked about that today is to sort of understand one of the biggest problems that's going on right now, and that's just central banks kicking the can down the road. What's to say the bond market doesn't blow up again, right? What's to say that the bond market doesn't blow up here in the United States? We're already seeing the Treasury market being extremely illiquid. The US Treasury market is already ridiculously illiquid. So maybe Fed Chair Jerome Powell is going to be forced quantitative easing again. Well, we'll see. We finished the stream off with talking about the jobs report that is going to come out tomorrow. Non-farm payrolls estimated for about 250,000. Unemployment rate should stay unchanged, and that should impact monetary policy decision if we are going to stay steadfast with raising rates or not. I think it was a pretty good stream. I had a good time. Tom G, good to see you. Says, remember the manatees? Oh, are we buffering? Let me see. Dr. Longus says UE would be crazy right now in the United States. Hey, sunshine after rain. Sunshine, what do you think about this restaurant here? Look at how unique. The parlor room. This is a very nice place. But team, we're gonna be live tomorrow, 8:30. Now, I also wanna warn you guys, we may be live streaming at 8 o'clock, but I'll keep you updated on the YouTube community page, but we may be live streaming at 8 o'clock. But if not, we're gonna have our regular stream where we will be breaking down the non-farm payrolls. Once again, if you wanna hear more of my thoughts in depth, if you scan the QR code on the screen, Usually every other Thursday, I write a free investing newsletter for the group where I cover my thoughts on the US equity market, emerging markets, fixed income, real estate, all that good stuff. So scan the QR code, punch in your email, and I will send that to you for free. If you enjoyed the live stream tonight, holy crap, there's 900 people watching. If you enjoyed the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually live stream about 5 days a week between New York City and Miami, and we'd love to have you guys along for the ride. So in that case, to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. I want to wish everybody a very, very happy Friday. It's the end of the week. We made it. See you guys tomorrow. So Rachel Abreu, Sunshine After Rain, Eric Tate, Dr. Longas, Jay Peak, Sabrina Fair, thank you so much, Elias, Abdullah, Austin City Limits, NNB 045, Dusty Cole, all of our good moderators, Cindy Foley, Abdullah, British Gray. Make it a great end of the week. Please finish strong. And we'll meet back here at 8:30 p.m. Eastern Time to recap the non-farm payroll numbers. Take it easy, everybody. Bye for now. Have a good night.